Welcome back to Trading 360. I'm Nicole Petalides, live on the floor of the New York Stock Exchange. It's time for the big three. 3 stocks, 3 charts, 3 trades. Ben Lichtenstein will take us through the charts. Here to take us through the trades, Alan Nuckman, Chief Market Strategist at bullseyeoption.com. Thank you both for being here. Alan, how are you feeling about the market as we're hitting records, going into maybe a Santa Claus rally or not? You tell us.
Well, I think we've already had a Santa Claus rally. I mean, that's a 10% bump in the S&P, and most importantly, we're above 4,600, which was the top of the range that I've talked about for weeks and months and months. And that 400-point range, after that fake breakdown, come back inside the range and a pop above 4,600, that targets S&P 5,000. So there's still a lot upside left. But you also want to be a good money manager and learn to take profits along the way. You're never going to pick the bottom or the top. But one thing I do want to get out here, I'm really happy to be here in person because, I want to talk to Ben in person, all right? Because every morning I get up early and watch the Future Show and yell at the TV. So today I'm going to yell at Ben in person. This is a highlight of my career.
You have to pause that, you got to hold back against spitballs or something, because we really need for him to perform at his very, very best. So if he's showing charts and you don't like them, too bad, Alan.
Okay, all right.
Okay, let's get to Citigroup, which actually has had a nice little pop of late.
Well, to bring this back home, Ben and I are both futures guys. This is where we started on the trading floor years and years ago. Now, all markets come back to commodities. Without the underlying commodities and understanding the futures markets, you can't understand anything else. It's hard to trade. So Citigroup obviously is a play where you have to focus on what's going on with interest rates. Now, these guys have made a lot of money. The banks have made a lot of money here recently because of the difference between what they can pay their customers and what they're getting with the Fed. So rates are coming down, and that's just a matter of when, not if, here in the future. So I'm looking at that to be a positive boost for the overall macro market. And like I said, S&P 5,000 is not far away. Looking at Citi, it's trading about 48. The PE is 7. Now, it's still an inexpensive stock, provides a good yield. Now, I trade options, so I don't get the dividend. But I've got what I like to see. I had a bullish divergence low in October, and this stock has been trading between 80 and 40 for 5 full years. So this 40 is an important base support level. We're popped above the 200-day moving average. What I'm looking to do is buy an in-the-money option again, stock substitution. The 45 call is trading here for about 4 or so. It's $3 in the money, and it's the March option is going to have 3 months of time. So that's why I'm looking position, because the financials have started their comeback, but they still have a long, long ways to go.
Okay, Ben, your thoughts on this chart?
Well, Nicole, get ready, because this will be a spirited segment here on the show, that's for sure. Alan's been in the office for a couple hours this morning, and I've been poking the tiger through the cage for the last 60 minutes or so. So he's very fired up. But let's get into the charts. I want to direct your attention first and foremost to the more granular time frame where you can see a big move up. We were trading, if you remember, on the bottom left side of your screen. You can see down around 45. We rallied all the way up into 49-ish. 49.17 last week, and you can see how we've been consolidating since and forming an area of value here. Acceptance of the recent run-up that we've seen, 48.50, the key level right now, but just kind of focusing on this pattern, right? High conviction of the upside where you get that initiative move up, and then you get the balance that forms here as traders accept the more recent level that we've achieved, again, being around this 48.50 level. Now, as we take a step back, you're going to see this pattern repeat itself multiple times over and over again in a trend now that's been playing out here basically off the lows that we saw, if you look down around 38. Taking a look here at the move up we've seen. This is an hourly candle chart, and again, it repeats itself over and over again. We establish a staircase pattern, value moving higher no matter what you call it, a few different ways to describe it, but simply put a trend to the upside here. Again, down around 38 into the end of October, beginning of November, and you can see how the hourly candles here have rallied recently up to 49. Here's that big move up. We just looked at the balance we were talking about, but just one of the many areas of balance that have formed themselves along the way. We're currently around 48.50 the way I see it. As long as we're above 47, I think all of this very bullish. in many ways here. Let's take one more step back. I want to show you what's going on the bigger picture time frame, because this is the move we just looked at again off the end of October, beginning of November lows. And notice here how we were in a trend environment to the downside, balancing around 41. The bears wanted to see us break down, form a new area balance at a lower level. In fact, the opposite happened. We took out 46, invalidating the working assumption that we were trending lower. You can see how we're holding above that level right now. This was a big move up here, Nicole. Lastly, let me show you one more chart so you can see where we are relative to the 50, the 200-day moving average. Here's Citi above the 200, above the 50, but you can also see kind of lagging and still sort of struggling to take out some key areas that were established earlier this spring. We'll call it up around 50, 52, and then ultimately highs from January up around 53. So still under pressure here in terms of those levels from earlier this year, but definitely exhibiting some enthusiasm as of recent.
Okay. And, you know, as I look at all of this, I mean, what are your thoughts on the big picture, Alan, when it comes to these banks? I mean, you know, as we see Citigroup coming up off of these lows of $38 up to $47, as you see rates, I mean, what are you thinking about the group?
Well, I just trade what I see. And when Ben was poking the bull, if you mess with the bull, you get the horns. When Ben was poking the bull, I was showing my money flow indicator, and the money flow is very bullish for this particular stock, showing me that smart money, intelligent money is accumulating large positions in this stock. So that's one of the indicators I use to help me put me on the right side of the trade. And that 45 level is a great consolidation area where it's broken out from. So that should hold as a solid support. I try not to think too much about the macro picture, but as we all know, banks still make billions and billions of dollars each and every quarter, regardless if rates are high or low. They know how to make money.
Okay. Next up, the Ford F-150 Lightning. It was hot, then not. Turns out that they're not seeing exactly the demand that they had hoped for. I just can't get that one story about that gentleman who tried to drive cross country and just left it midway along his trip. So they're cutting production. Your thoughts on Ford?
Well, Ford, I'm a Michigan State man, so you know, I'm big on the big three. And Ford's a PE of 7. So again, it's an inexpensive stock compared to the overall market, which got a PE of 18 or 19. This is a stock that is half of what it was at 25 here in 2022. So we've been between 11 and 15 for most of the year. Now, we had a fake out breakdown like we did in the S&P just a few months ago, where it went down to 10, but it's back right inside that range again. So trading in this range, a breakout of its range targets 19 on the upside. There's a gap up above at 11 and a gap at 15 to be filled. So the 1250 level is critical. Once this market gets on the move again, 1250 is the 200-day moving average, and it's also the halfway point of that range. So what I'm looking at here is a January of 2025. Yes, Ben, that's over a year ago if you want to do the math. So that's a 10 call. It's trading for about 2. It's $1 in the money. It's like being long from 10. And like I said, this was a $25 stock here in 2022 with gaps up above. It's trading at half of what it was. So the break even is $1 higher with 400 days of time for this to develop. And the low is 965, and that's the lowest it had been since like 2021. So it's a good level to lean on, in my opinion.
Okay. Your thoughts here, Ben, when you take a look at this chart, knowing that they're cutting this production in half?
Yeah, and knowing that the trend to the downside on the longer term charts have been lower here, I'm going to have to push back on this one a little bit, Alan. And Nicole, he mentioned he was going to do some yelling about the charts. That wasn't really yelling, to my opinion, in terms of that last example. But Alan, in all fairness, the person who should be doing the yelling here is really me. You brought an empty bag of chicken ribs here today. This is Nicole Allen's other business. And who brings an empty bag? I mean, come on, Alan. Okay, let's get into the chart here, though. Taking a look at Ford, you can see the rally, the move up. And this is why, again, on the short term, I can kind of see what Alan's talking about in terms of momentum to the upside. We've got a 30-minute candle chart here that you can see areas of value that have been forming at higher and higher levels. It was just a couple weeks ago we were trading 1025, 1060, 1080, exactly what the bulls want to see, right? Stacking up these areas at higher and higher levels. As long as we hold above 1080 right now, I'm not even so concerned that we had a blowout top that failed. Just that's the key area to watch. And again, this is a 30-minute candle chart, so let's not put too much weight into this one, but stepping back one more time, and this is where that bearish kind of a pushback is going going to come from, because you can see, as you take a look here, this chart goes all the way back to the end of June, beginning of July. We've actually been trending lower. You can see some of the areas of consolidation that have formed at lower and lower levels. I mapped them out in case your eye wasn't drawn to them to the extent that mine is. I'm watching here as, yeah, we're getting a little bit of a lift off through this range here, but you can see the high conviction that we saw in reaction to earnings recently as we broke out of balance to the downside. You can also see as you step back, these areas of consolidation that formed at lower and lower levels. So we're working assumption right now that, again, on that more intermediate, or I'm sorry, granular time frame, the 30-minute candle chart, yeah, we're trending higher over the last week or so, but on the longer term, going back to June, July, we're trending lower. Let me show you what's going on here when you take one more step back, another bearish narrative as you see this chart here. This is a daily candle chart here, Nicole, and it just does not paint a pretty picture. Looks to me like Ford's stalling out here, right, and just kind of off on the side of the road at this point, maybe even losing a wheel, and many would argue, if we start to roll over. Break back down below 10 opens up a door for a retest that double bottom that we saw earlier this year, earlier this fall, and yeah, unfortunately, Nicole, I have a hard time following along with the bearish narrative in this one. And these longer-term time frames, as Alan's talking about trading from that perspective, short-term, yeah, some bullish momentum to the upside, but long-term still under pressure.
And could lose a wheel. All right. I think I'm going to leave that one alone unless you want to add any comments and then get to... Yeah, go ahead, Alan.
Yeah, I do. So, you know, I particularly believe in America, and Ford's a great risk-reward play, and being long from 10 on a stock that was 25 here recently. You know, I'm looking for a lot of positives here to happen in the markets in the next year. This option has 400 days of time, and being long from 10, being $1, having a break even at $1 higher, that's the way I like to position for success.
All right. And I'd say it's safe to say that Ben and I believe in America too, regardless
I wasn't implying that. I'm just from Michigan, so
okay.
that's all I was trying to say.
I'm also just adding, I love the USA. So that being said, let's get to C3AI, which actually shares have been trading a little higher. The stock dipped down a little bit earlier, you know, and have been making a little bit of a comeback. What are we thinking?
All right, I trade what I see, and so far today I've gotten one yes, one no, and this might be a maybe so. Probably not. All right, AI is trading about 28. Now, I'm not a technology guy, as you can see. Ben and I are grumpy old men. So what I'm looking at is a chart. Now, this is a chart that has a lot of bullish leverage buying. It's above the 200-day moving average, which is a positive. It's come back. It's up 100 and some percent, 150% in 2023, but it's pulled back 40% from its June top. Now, we've been consolidating between 24 and 32. All right, so there's a solid level to lean on here. It's been 3 months. A breakout in the range target is 40. 28 is where we are at right now, is at the midpoint of this pivot, a midpoint of this range. So a push above this here should see a pop to the range top, which is 32. So I like the risk reward. I like how it's kind of fallen back out of favor a little bit. So the psychology is not as strong. And so I think it's set up for a move. I'm looking at an April option. April option has 4 months of time. A 25 call. Again, that super support point is 24. So this is the way I'm looking to swing. It's trading for about 6 right now. So it's in the money option. Again, that's the way I like to trade. My better way to trade, buying in the money options that act like the stock, tie up less money, but a modest move in this underlying stock produces big gains in the options. A 5% move in the stock is 50% in the right option. A 10% move is about 100% in the right option. And that's the way I want to position, with a little bit more of a high flyer that hasn't participated in the last couple of months, whereas the market's taken off.
Okay. Ben, final thoughts on this one, please.
Well, hasn't participated is the understatement in many ways, Nicole, but I do want to push back on the old grumpy statement. Alan, I'm not old, okay, at heart. Hey, let's dive into AI on this one, and you can see kind of a clouded image here, right? Not necessarily the pattern that we like to see. It actually was stacking up pretty well. We were seeing value move higher and higher, and then we kind of topped out here into the end of November around this $32 level. Let me show you what we've got going on. It again is not exactly what the bulls look to see. We did have migration value moving higher, but Alan was talking about 32. I think it was the 28 area is really where I have my eye on, and you can see again kind of losing some of the momentum. So as we chop around this 28 level, we sort of lost the trend higher, but haven't really established anything to the downside. As I look at this, it could be that we're just forming one larger area consolidation around 28, which is again where my eye was drawn to. Let me show you why as we step away from these 30-minute candle charts, because there's just not a lot of information there, right? Only so much we can gather from that kind of random price activity on that smaller snapshot, that more granular time frame. Taking a look here though, look at this trend lower. Since the end of July of this year, we have been coming under pressure. Shares of AI, again, establishing areas of value at lower and lower levels. I mentioned the $28 level being significant. So now, in terms of Alan's mention of 32, you can see the area there. There could get some lift here, still hold in that working assumption that we're trending lower. In fact, we could come all the way back and retest these highs as long as we hold below 36 now, 36 being that last area consolidation prior to the one that we're forming right now around 28. There might be some room to the upside. That's why I say maybe so in terms of this one, Alan. But hey, step back and you're going to see a longer-term trend remains very well defined to the downside. This chart goes all the way back to 2020, beginning of 2021. We were trading up around 184. And look at this move lower. I mentioned the significance associated with 28. You can see it's going all the way back to the fall of 2021. This is a well-defined area right now. Again, maybe a little bit of room to the upside as you work your way back in this level, but that still is in a trend environment to the downside as long as we're below 50 on, again, they were looking at a longer-term daily chart here.
All right. Thank you for that, Ben. And as you know, we usually give the guest the last word. So take it easy, Alan. Okay, go ahead. Final word here.
This has
Alan
been,
Uckman.
yeah, this has been, a polite conversation here. It's a little bit different than usually me yelling at my TV watching the Future Show early in the morning. So I have to use different language while I'm on here. But I do appreciate his professionalism, actually in person. It wasn't something that I was expecting. But I do want to say one more thing about technology here. So every morning when I get up and watch this Futures Show, I look to see where the NASDAQ futures are, and that can set myself up for my AI play on this. And I think that you can't buck the momentum. It's up 150% this year, and you're buying low, and let's see if it can go high.
All right. Thank you both so very much. A lot of fun. Always great to see you. Thank you for a big three today. Alan Uckman, Ben Lichtenstein. Coming up next, a spotlight on the cloud, AI, more on that, and some trends to watch for 2024. That and much more here on Schwab Network. We'll be right back.